Okay, good morning, everybody. Good morning. Good morning. Gerald set up the video. Check sound, check the video. Gerald, make sure we're good to go. All right. Everything good? Everybody, good morning. Good morning. All right. Let's get rolling this morning. Derry, good morning. Hey, George, good morning. Leo, good morning. Let's look. Hey, Thomas, good morning. Let's look at yesterday's a projected game plan. It worked out perfect yesterday. Everything uh, worked out just as we went over on our pre-market game plan. Went right down to our pre-market target. So, hey, Steve, good morning. So we're gonna do the same thing today. Let's recap yesterday first and how I projected the move and where the targets were, and then we'll go over today's game plan. And hey, Gerald, good morning. And then we will go over today's targets. So yesterday was just a beautiful move to the downside. Let's go over why we want to look at these liquidity grab sweep zones. So this essentially what we like to do in a nutshell is we want to look where the smart or professional players in the market are going to be buying and selling during the day. And the market's very orderly. So what it likes to do, and we went over this plan yesterday, and this is our liquidity grab sweep zone. I call these the zones, or the LGs, they're liquidity grabs. But essentially what they're doing is they're sweeping stops out from the amateur players in the market and they're continuing it to that direction that they want to push. In other words, if you are an institution or if you are a big player in the market or if you are, a hedge fund or a prop firm, etc., or one of these, Goldman Sachs Delta algorithms, then what you want to do is you want to create yourself liquidity to capture stops, to add contracts, because you just can't throw 1,000 contracts at the market. So the market's always trying to stop hunt or grab liquidity, which I call liquidity grabs. In other words, essentially what they are, they're sweeping the stops out of the market. So when you see these zones that get hit, these are called liquidity grab sweeps. You probably see when I do my stock trading, I look for option sweeps, or I look for options that are trading above the ask. In other words, is if I see big players in the market that are trading above the ask on option markets and they're sweeping to a larger strike price away from the current price, that's educating me that there's big players in the market. For example, we do the same thing in the futures. Let's say you trade stocks and you trade NVIDIA. And we just had a big NVIDIA buyer in the market last week. They were trading the 190 strike calls when NVIDIA was 178. And they were buying them above the ask after the big correction last week. We had that big move down to the downside Monday, Tuesday, and Wednesday when the hedge funds made $24 billion to the downside on software stocks because they were shorting software stocks. They said the AI bubble was coming in, and the smart money is always ahead of the public. You saw a big buyer in NVIDIA on 190 strike calls that were 10 points outside of the where the stock was trading at. So that tells you, and they were buying them above the ask. So they were sweeping. That's called they had a position already on the books, and they swept it to a larger, a 10 points above the current strike price. So in other words, what the public's doing, what the institutions like to do, they're always trying to get an advantage and try to position themselves ahead of what the public is doing, or what the amateur traders are doing. So they're essentially what they do is they're always trying to look for one. They're trying to get an advantage in the market, and how you get an advantage in the market in options trading is, what I like to do when looking for stocks is I like to look at the option market and see where they're buying above the ask if they're buying, or they're shorting below the bid if they're buying below the bid, or shorting below the bid if they're selling. It gives me an edge on what the market's going to do in the future. Same thing with futures. Futures, what they like to do, and even stocks, they like to sweep stops. So what the professionals will do is they're very orderly. Is what they're trying to do is always stop hunt, and they're trying to look for positions in the market where they can stop hunt on a pullback and take out the positions on these stops on these amateur players in the market, and then they're like continue it in the direction that they want it to go. So that essentially is called a liquidity sweep. All right, liquidity sweep. I like calling them liquidity grabs because they're grabbing liquidity on a pullback, which is essentially a sweeping. They're sweeping liquidity from amateur traders. They're sweeping. They're bringing it back into these zones. They're sweeping all the liquidity up, which is a stop hunt, and they're bringing it in the direction of the move. So when you hear liquidity zone, liquidity sweeps, that's essentially what it means. It means they're just pulling the market back into a certain area of the market where they're sweeping that position from players in the market, or the amateur traders or what have you. And to understand that a little bit more, let me show you. Let me show you here on a daily chart. So this is a daily chart. So essentially what a sweep is that what you'll do is, this is a liquidity grab sweep on the 100-day moving average off the daily right here. This is a sweep zone. So what they'll do is they'll pull the market back really hard, and then they will set a lower low than the current previous day or daily position, and then they'll close it right back above the break of previous support or resistance. So that's a liquidity grab sweep on a daily chart. You see the wicks, they broke the bar, the candle broke the 100 intraday. They wicked it below the previous low, and then they brought it right back below it. They're sweeping stops, but closing the candle right back above the 100 moving average. So that's called a liquidity grab sweep. Okay, they did the same thing over here. This is a sweep on the daily chart. They tried to close below the 100, and they tanked the market from 38 down to 44 or 52. They dropped it significantly. You're talking about a 68.38 down to 67.51. They dropped it 80 points on the S&P. Right? And then they, from this point, from this daily, and they swept the stops out, the underlying stops on all the shorts, and the Dow went up 1,000 points. So that's sweeping the market. They're sweeping stops out, or they're stop hunting. So you see when it happens on the daily. Okay, so we do the same thing on intraday charts. So let's go over yesterday what I projected and how I came up with this downside target and what was our plan. So what we like to do is we like to find out, first of all, before I get to our execution chart was absolutely beautiful yesterday. You can see right here, my target hit. This is a projected target that I had at 9 o'clock in the morning. It actually hit at 10:15, about an hour and 15 minutes later, and it was a beautiful trade. It was from 69.95. The target hit at 69.55. So just a beautiful 40-point hit in the S&P that was projected before it even happened, an hour and 15 minutes before it happened. You guys saw that live yesterday. So how did I do it? How did the algorithm pick it up? And let's get to work here this morning. And then we'll get to work this morning at the New York Open in 30 minutes. I'm going to show you today's game plan. And we're going to go over that also. So the first thing we got to establish, are we going to be buyers or net sellers in the market? So I went over this on the February 10th and how we projected this liquidity grab buy zone, and then how we projected these breaking these ledges. These were all sell zones, and these ledges worked out perfect. So play yesterday's video and the previous day's video, and you'll understand this chart. I'm not going to go in that detail this morning. I went over for 35 minutes yesterday. I went over 35 minutes or 40 minutes the day before. So go to daytradingthefutures.com, and you'll see exactly the way I call these ledges. So we know how to do that. So yesterday, we talked about this. We talked about these ledges in the market. I marked these ledges up in the market right here before they hit. I said, if we ever break below this 78, 77, 78, and you can play my video and you'll see this live on the video before this even broke down at this level. We're talking about this in the video when the price is actually up at this level up here. I said, if we break down below this level, we're going to look for the market to crash down to 77, and then the ultimate target's going to be 55 down at this level. I said, that's if we get back inside and break this ledge, I want to look for a liquidity grab sweep or liquidity grab sell at these ledges. I want to see when price is breaking these ledges, I want to look for a pullback in the market where the professional smart money is going to pull the market back into my sell zones. And then we're going to look to see if we can get a pull-in the market, a confirmation with my yellow trigger entries to see if we can get a big market move down. And it did exactly like the game plan we talked about yesterday. We got below the 50 MA. Now, yesterday's video is very important if you understand what a lot of mutual funds do, institutions, banks, hedge funds. They love to use this 50 MA as a barometer of the market and let you know if the market is buying or selling liquidity. All right, so this keeps you on the right side of the market if you want to sell liquidity grab sweeps, or if you're on the right side of the market above the 50, if you need to be a net buyer and buy liquidity grab sweeps, meaning they're sweeping stops out from the amateur traders. So what we need to understand going into the game plan today is where we at, which we'll go over in a second. Right now, we're going to be a net buyer in our zones. We're above all 4 MAs. Remember, moving averages are worthless by nature. You can't use them for crossovers. They're lagging. You can't just use them for buying and selling support and resistance on buy, sell. If it hits it, let's put an order in. It doesn't work that way because your stops would be enormous. But they do give you a direction of, is the market trying to buy? Are they trying to sweep stops out to the buy side? Are they trying to sweep stops out to the downside? When we broke this key level right there that I projected yesterday for you guys, I said if we break that key level, we're going to look for a liquidity grab sweep sell. Okay? Hey, Gerald, yesterday's video is not working. If you could fix that, George said. It's working now, George. Very important video yesterday, George, to understand the liquidity grab sweeps. So play that. He says it's working now. So no problem, man. Hey, thanks, Gerald. So this is a key level. So right when it broke this sweep, we're looking for a possible, this ledge, we're looking for a possible what? We're looking for a possible rollover in the market into my sell zones. So today's projected levels, it's very simple. I can see my 20 sitting here, the ledge on my 20 sitting there. I see my ledge on the 50, which is the most important. That can change the dynamics of the market immediately there. You always want to mark up your ledges on the market. This is a 30-minute chart. These are not magical moving averages. They're just the 20, 50, 100, and 200. Very simple. And then I said we could have a big drop yesterday up here. I said this market, if we break below the 50, we should come down to the 200. And I was exactly correct on the projection, and it hit our target, which I'll show you in a second. But that's our ledges for today. So what are we doing right now? It's buy side sweeps. We're doing buy side sweeps, right? Until we start breaking through these ledges. The biggest gap, what I like to do is I like to look at the gaps in between the ledges too. Why is that important? Well, let me show you. When I set up the trading plan before the New York Open a couple days ago for you guys, I said if we close below, we start breaking these ledges, look for the liquidity grab sweep. We broke the 50, which is the most important right here. At 1:30 in the afternoon, it broke it. And I said if we break that 50, we got a big gap down to the 200. So you can see just by looking at this chart, if you got a potential big runner for the day, and it takes you a half of a second to realize it. Look at the big gap in the market right here. That's a huge gap in the market between the 50 and the 100. So what it did, it closed the whole body candle closed below my 50. It retested. My liquidity grab sweep zone was right at this high. And I showed you guys in the video how it captured it, and it went right down to it. So you can see when these big possible gaps in the market are. We broke below the 50 here. I said we should go down to the 200. That was a big gap in the market there too, and it filled that whole gap. All right, so today, the trading plan, which I'll go over after I do this video, where's the biggest gap? Well, we break the 50 here at 76. Looks like we're going down to 61 again. You got about a 15-point drop in the S&P. If we hold above the 20 all day at 79.5, then it's conducive to, it's for us, what we want to do is we want to look for buy-side sweeps in my zones. It's simple as that. If I'm above all MAs, I'm looking for buy-side liquidity grab sweeps. If I'm below all MAs, I'm looking for sell-side liquidity grab sweeps. And like I said, I made it easy for you to understand. If you want to take all these off and just look at the 50, you can do that. I like you leaving them all on because I want to know when I'm above all, below, or above or below all of them. But if I take it off, you want to keep it simple, just so you understand what the institutions like to do. They love the 50 EMA. These are exponential, by the way. No secret. Oops. Let me go back in here. So what we want to do is we want to see, are we above the 50 or below the 50 for our trading? And if you take these others off real quick, you can clearly see what we're doing. All right, there you go. So sell side sweeps, right? Sell side liquidity sweeps. That's what they're doing. Sell side liquidity sweeps, buy side liquidity sweeps. So if you are below, this is, I set this up on the 3rd. I said if we break below the 50, look for the market to crash. There's my ledge. Called right on that. We had a liquidity grab sweep right there that just tanked. But if you can see, watch my crosshair. Below the 50. This doesn't count as a close above. I need the body of the candle. The wicks of the candle are for amateur traders that get stopped out. Those are stop outs. We don't look at the wicks of the candle. We never use the wicks of the candle. That shows where liquidity is being grabbed. We use the body of the open versus close. That's a straddle. Still downside, 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 downside. So for the first 3 days when they took the software stocks to the woodshed and they came out to report, like I said, the hedge funds made what, $23-24 billion on the market to the downside on just software stocks. So because of AI potential bubble. And then, like I said yesterday's video, Alphabet comes out and says, hey, we're putting $180 billion in AI. Then, hey, the world's all great again. And then they close above the 50 and the market goes up 1,000 points. The Dow gets over 50,000. So the market environment changes that quick. So what we have to do is we have to make sure we stay on the right side of liquidity. You know, they made everything back in one day that they gave up for 3 days. It's pretty crazy. The market's really resilient. So it came right back up. Now what are we doing? We're consolidating right now. Now we're consolidating. We're consolidating. You can see we're in a major consolidation move. So that's going to tell me if I ever get outside of this level right here on this triple bottom, this market's going to give up a lot of ground. If I break back out to this upside is 70.11. We should come up for the double top at 70.27, and then we should have a considerable move to the upside again. So we can see what they're doing. This week has been sort of a consolidation after the big down, big up last week. It was a crazy week last week. So we've been in a big range, but it's been a very profitable range for those that are trading liquidity grab sweeps, like we on trading these ledges, because my liquidity grab zones have been calling these moves down from these ledges. We called the big move down yesterday, and we're going to try to see if we can get some buy-side liquidity sweeps to the upside today. So that chart really helps you out, okay? Just by staying on, we know we're above the 50 now. We know that on this, just nothing magical about the time frame. It's a 30-minute chart. There's the 50 exponential. So I know that's my ledge right now in the market, all right, at 75, around 75, 76. So if I start breaking below that, I want to look for liquidity grab sweep sells, okay? Just like yesterday. When we were up here, and I go back and play yesterday's video, we're right in here, and I said, listen, we break through this 50, look for the first liquidity grab sweep sell, and I'll show you the entry chart, and we got it. And it went right down to my target, okay? So that's why I like using that chart over there. Let me put all the MAs back on. It gives me an idea of, are you going to be a buyer, or are you going to be a seller of liquidity grab sweeps? Are they sweeping the market to the upside? What a sweep is, they're just taking stops out, guys. All right, so there's our levels for today. The bottom chart, it's very simple. You take a quick glance at it. It takes a half a second to look at that too. I stack them on top of each other because I can clearly see within a half a second of what my game plan is. My game plan is very simple. What are they doing? They broke the ledge right here. They broke the ledge. These are long-term sweep zones off a bigger chart. These are big. This is off a big chart. These are big sweep zones. So you can see what the market likes to do off these zones. Swept all these traders out of the market. Counters, swept them. Swept the counters. Look at, they brought it right down to the zones. So this, I just look as a glance. I want to get my mind right. Well, if I'm above all my MAs, I know we're looking for buy-side liquidity sweeps. And this gives me just a real clear indication that I need to be a net buyer right now. I need to be a net buyer. Until I break this ledge here at this level, if I start breaking this level intra-bar, they'll look for a liquidity grab sweep sell. But that's down to 66.25. Yesterday, that big drop-off started at 10 o'clock in the morning. And what did I say in the last two videos, even last week? These moves are happening right at 10 o'clock. You should be looking right at 9:35 when I project today's plan, which we'll go over in a second. You should look for a trade between 9:35 and 10:10 to 10:15. Power hour is 9:30 to 10:30. That's where power hour is. That's when you have the most volume. But we want to even look before that. We should have a position on between 9:35 to 10:10 for a big possible runner, and we've had that the last couple of days. Friday, we've had the same thing. I mean, that's when we want to try to participate. Then after 10:30, I said yesterday, look for the market to correct back to the upside. It did exactly that. 10:30, we start seeing buy-side liquidity sweeps, and they brought the market right back up. It got inside of my developing profile that I did on the video yesterday, which I'll go over in a second. I said, this is when you want to counter the market if it happens. Got back inside of it, retested it, market exploded to the upside. All right, this is not hard to understand. All we're doing is we're going with liquidity. Okay, so this gives you a nice little ledge for today to keep in mind, and you can mark these on your charts too. If you see 69, 66.25, we start breaking an intra candle, starts breaking below it, because this is a big tick chart. I mean, this is a huge chart. This is a 11150 Unirinco. It's a huge chart, so it's going to take a lot. It's going to take 150 ticks to reverse this thing. So we have a true indication, are they buying? And here's my proprietary liquidity grab zones. Are they net buyers or net sellers? What are they doing? Institutions don't buy liquidity and scalp. They're looking for big moves in the S&P. They're not scalping for 1 or 2 points. You have high frequency algorithms that like to do that. But typically, when you get a hedge fund, institutional trade, that they're looking for a big push in the market. So this chart picks that up. So that's 66 and a quarter. So just by looking at those two charts, you can come to the conclusion on one thing about the market right now. Right now it's still we're up. All right. We know about market profile. I'm not going to go over that today. I showed you how to set that up on the last two videos. But you can see that we're in a balanced market right now. We're inside HV and LVA. We're inside of a balanced market. Once we get outside of the HV and LVA, then we'll become imbalanced. So let's go over in our entry chart yesterday, how I projected this. So what we did before the New York Open, we saw the ledges. The ledge was up here. The market moved up. We had a couple nice buy signals. Had one at 8:15 right here. We had one at 8:30. Big push up. They were liquidity grab buying sweeps, right? Hit our targets. Real big, nice move up for you early morning traders. Big buy at 8:15. Big buy, and I'll show you that in a second. And then we started moving down, and we broke below our 50, and the market crashed. All right, so how can you project that? If you look at this chart, this is our entry chart. So our entry chart, you can see exactly what the market did. This is from 5 o'clock in the morning to 10 o'clock when we should be done trading by 10:15 anyway, in that first half hour, 35, 40 minutes of trading. What they did, the market was above all of my MAs, and it was above this chart down here, was above its ledge also. We were buying, right? Everybody was buying. They're buying sweeps. If you look into liquidity grab zone, it reversed right inside my zone here at 8:18. Reverse inside my zone here at 8:31. And then we got up to around 9 o'clock. And this is when I said, watch for the liquidity grab zones at the New York Open. So the New York Open, what I did is I put these two zones up. I put this zone up, and you're going to do this. We're going to do this today at 9:30. These are the liquidity grab zones. You see the little slices. That's my proprietary algorithm. This is a proprietary algorithm that gives you these little slices. That's the zones. I marked this zone up, and I marked this red zone up. The market likes to fight it out and find a direction and see which are they going to favor. They're going to favor the sell side sweep or the buy side sweep. And sure enough, what it did is it came down to the buy side sweep, and the first 5 minutes of trading occurred. That's when I mark up my 5-minute opening range. The 5-minute opening range will show you the energy of the market and what direction you're looking for a push. What that means is this. In the first 5 minutes of trading, we mark the high of price action and the low of price action, and we mark up these the low and high. All right, it's between the low and high. That will tell us the energy of the market right at 9:30 to 9:35. We don't need to use the 15-minute opening range. We don't need to use a 30-minute opening range because we're typically done by 10:15 anyway on a couple of our future moves. We're trading futures. We're not trading stocks. Now, if you trade stocks, the 1 hour opening range works great. 15-minute opening range works great, right? Because you're trading all the way to probably the close. But if you're trading futures market, our window of opportunity is going to be power hour, 9:30 to 10:30. And then it's going to be 12:50 in the afternoon into the close. That's our opportunity to trade futures. We want to stay away from the dead spot from 10:30 to 12:50 in the afternoon. Now the algorithms are kicking in right around 12:50, 10 to 1. We see a lot of trades happen right around 1:15 to 1:30 on our system for big possible runners. So in these liquidity grab zones. So we need to go to work right after 9:35 to 10:10. So yesterday we had it all planned out that they're either going to buy the zone or sell the zone. They're going to be net buyers and net sellers. So they came up and they came right into the liquidity grab zone, and we got a yellow trigger right here. We got a yellow trigger at 9:46. Now we just talked about how we want to look for setups, these liquidity grab sweeps inside of my zones between 9:35 and around 10:15. 10:30, you're kind of late in the tooth. You're kind of late in the game. If you're putting a position on at 10:30, that means you're putting it on after all this major big drop. You're adding yourself risk. That's usually when they like to counter the market back up. All right. So the market does this then. It comes up. So we had a buy zone. Look how it reacted out the buy zone. Perfect liquidity grab sweep inside the buy zone. These are outside the buy zone. These are momentum scalp plays. So those are more dangerous plays because those are outside of my zones. So you want to look for a buy zone, green buy zone. Here's my green buy zone. Here's my red. So what happens is the sweep was confirmed by this. Now let me show you a little bit, another technique that a lot of the institutional traders and professional traders will use. So it comes inside my sell zone, right? It comes inside my sell zone. Right there. We got the reversal. We got the yellow trigger entry. Where's the confirmation that they just swept the market, swept stops out? Right here at this low. That just told you right there, when that low got broke, that they're going to try to drill the market and take it to the woodshed, because that is what's called a confirmation sweep. When you break the previous low or previous high on the chart, you just got a confirmation that that sweep level, that sweep zone is confirmation that the institution or the smart money is trying to sweep the market to the downside. They're trying to take stops out. Over here, this high, when it was broke, that confirmation right there told you they're trying to, that confirmation sweep zone is confirmed. Here, this high when it's broke, that is a confirmation that that liquidity grab sweep zone is confirmed. This low here, this confirmation is that this low is broke, is confirmation that that liquidity grab sweep zone will be confirmed. So you can see, you can confirm these sweep zones also with confirmation if they're really trying to sweep stops out. Do you have institutional players or big algorithms in play? So that's another way you can do it. So what we did is we come inside of not only our liquidity grab sweep zone, it broke the low of the previous, this is called market structure. So if you ever traded fair value gaps, or if you ever traded, if you understand liquidity grabs at all or liquidity grab sweeps, there's what's called market structure. And what market structure does, market structure is what it is. It's the previous low or previous high of a move. And if they're really trying to create a big high here, do you think institutions are just going to short this zone and scalp it for a few points? No. They're looking for a big move in the market, right? Or do you think they're just going to scalp it for a few points here, few points here? No, in these buy zones? No, they're looking for a big move in the market. So what they do, this is called market structure break. So that's market structure break. That's market structure break. That's market structure break. And it's kind of neat with market structure break. But I'll show you a little advanced technique with market structure break. Here's market structure break on this one too. Look what they try to do on market structure break. It's kind of neat. Because what they'll do is they'll try to grab liquidity even after the market structure break, because they're always trying to add liquidity. So here my zone caught the high, right? My target was all the way down here to 55 pre-market. We went over that. And it went right down to it. The short was at 95. My target was 55. I projected this at 9 o'clock in the morning. It went right down to it. How I did it, I just used market profile as my target. I use market profile in my ledges in the market on my 30-minute chart. That's how I come up with my downside targets and upside targets. I'll go over those again today also. But take a look at what they do. So there's my reversal. There's my yellow trigger. This is the market structure break. So there's market structure break. Now we got confirmation this thing's going to roll. Market structure break is just a market structure low. There's a market structure break right there at the low. So if you trade in these liquidity grab sweeps, market structure break, market structure break. I want you to watch what they do. So in this market structure break here, they break the lows. Look at the sweep they try to do again. Look at these big tails on the Renko. They brought that from 89.25 all the way to 95. They brought it back 6 S&P points after it just closed below the market structure low here. So they brought it below the low, right, of 90.5. It went down to 89.5, just a point. They knew it broke market structure. These algorithms are programmed like this. The institutions prey on amateur traders. What do? Bring it right back up intra-bar by 6 points on the S&P and close it right back below. What I want you to do when you see a liquidity grab next time, watch for the previous low or previous high to break. It usually goes down a point, point and a half, and then it gives up around 6 S&P points or what have you. That move up, and then it comes back and closes red. If that happens, you got confirmation that this is ready to roll. Market just tanks. Same thing here. We got a yellow trigger entry. Market structure break. What do? Oh, they want to capture more liquidity. They bring it back up above market structure, close it back below, turns red, crash the market. Do they do the same thing on the upside? Absolutely. They're trying to prey on amateur traders. Here, we broke market structure high because what you do is you have traders that like to do what? They like to buy all-time highs and all-time lows. You know, they're trying to be momentum traders. So the smart money knows this. So what they're going to do is they're going to bring it above market structure. And what do here? They brought it from 99.5 all the way down to 92. Right? Another 6, 7 S&P points. They brought it right back to green. Once you see that, you know they're trying to bring it higher. It's a nice little trick I like to look at in the S&P because that is smart money trying to prey on stops again. Right? So you can not only look for liquidity grab sweep zones like this, you can see when the market structure break happens and continues down. That's called a market structure break. But anyway, that is my liquidity grab sweep zone. And it called the high, and we just got crushed. We're right down to my target. This is my projected target 9. Went down 40 S&P points, came back up. This is a yellow trigger entry. This is a momentum play. It did not get into my liquidity grab sweep zone. This is a momentum play. So if you trade momentum plays, you can wait for the market structure break if you want. Let it see if you can grab liquidity, close back red. Then you get in. Then you can place your stop just above that sweep because they swept right there. That's the liquidity grab sweep. So you could have your entry here. If you're trading order flow, entry there. And your stop would be right there. Another great way to play the market. All right, there's your risk. Okay. Because it happens on market structure breaks. Then they come down, and what do? They went right into my liquidity grab zones. Right into my zone. Right in my sweep zone. These zones are beautiful. Look how they keep setting lower highs. Where's the market structure break? Look at it. Watch. Confirmation that that zone is now swept. The stops is market structure low. Now watch. Watch what they do. You guys are going to really like this once you understand this. What did they do? Look at this big spike up in the S&P, right, when they broke market structure. Because they know what? They know you got traders that are just buying new lows or new highs. They're just showing their mark. So what do? They're going to try to stop them out. It went from here. It went from 45 3/4 all the way up to 53. Almost 9 S&P points that brought it back up. And we brought it right back down and closed back red. That's the time that you just confirmed after it goes all the way up and closes back red below market structure. You now confirmed that this market is looking to go where? Down. So watch these market structure breaks after liquidity grab zones. What it does, it gives you the tell and where they like to pull the market back to sweep stops out. Market structure break after liquidity grab zone. Market structure break after a momentum sell. Market structure break after a liquidity grab sweep zone. Pretty cool, right? Same thing over here. Trading You got to have the most knowledge. If you're knowledgeable in trading, you understand market structure break here. Knowledge is power in the market, guys. You got to understand what they're doing. Market structure break. There. And market structure break there. Everybody understand market structure break now with the liquidity grab zone. Give me a Y if you understand that. Everybody understand? It's just a previous low or previous high after you're inside of the zone. And confirmation. Everybody good? Give me a Y, guys. You good before I move on? You guys good? You good? Very important information. Understand this. It gives you confirmation that they just swept stops. Hey, Brian. Good morning. Market structure break. Key. All right. Sounds good. All right. So now what I say yesterday, let's get everything done by around 10:30. Why? Look what happened at 10:30. What did I say yesterday is going to happen at 10:30? We're probably going to have a counter move back up. I said, look for the first liquidity grab buy zone after we get back inside of the developing profile. What'd they do? There it was. I said it can come all the way back up to this high too. Right there's your buy. The first liquidity grab buy zone after we broke inside of developing profile, called it. Got another one there. Another one there. Another one there. They brought it back up. Okay, so try to get your market structure breaks and your liquidity grabs, sell and buy zones done before 10:30. Okay, yesterday we had 1, 2, 3, 4, 5 for 5. We were 5 for 5 in our zones yesterday in market structure breaks. If you understand how price action works. Okay, it's 9:30. Let's look at the game plan. Before 9:30 here, let's look at what's going on first. And I'll put up the 5-minute opening range in a second. But I want to show you why I projected that counter move back up. What did I say yesterday? I said yesterday, watch out for this developing profile. Developing profile, we know about volume profile. We already know about this, the high value control point and low value. But right there, developing profile, the big, this red, I'll make this black so you see it. This red thin line. There's your red thin line, and here's your green thin line, right? When price was down here below here, on the microphone, I told you guys yesterday, we will not counter trend trade the market until what happens? We will not counter trend trade the market until we close inside of developing profile. And it's got to be a body candle close. Once it closes inside a developing profile, just like it closed out inside a developing profile here for the big crash, that's when we had liquidity grab sells all the way down. It closed inside right there by a body of the candle close, not the wicks. What did I say could happen? We're going to look for the first retest of the developing profile. Guess what that was? That was my liquidity grab sweep buy zone. It went right down to it. Market moved right back up. So when the market's moving hard down or hard up, pay attention to where not only on these high value, low value areas, watch this thin red line and thin green line. When it first closes inside of it from being outside of it, and what I said yesterday, in the history of market profile since 1985 for price profile, and in the history of profile and volume profile, if you close back inside of HVA from being outside of it, where's your target? And I said it'd be LVA, which was 55 anyway. That was where my 200-day was on the 30-minute chart, the 200 moving average, sorry. But when we close back inside of it here, we should go coast to coast, come right back up. Do you guys understand that before I move on? About developing profile, guys? Developing profile, we good? Give me a Y if you guys understand that. Developing, you get back inside of it, look for a crash, get back inside of it, look for a big move up. Everybody understand? All right, let's look at today's plan. Markets opened up. Are we buy side or sell side right now? Are we buy side or sell side right now? Buy side or sell side sweeps. Just by looking at these two charts to the far left, it takes you half a second. We're buy side, right, George? Yes. So we're buy side liquidity. We want to buy side sweeps, buy side. We're not shorting. We do not short the market. 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 We're buy side liquidity. Buy side liquidity. Buy side liquidity. All right? Get your mind right. When you come into trading, get your mind right. On the bottom chart is the buy side or sell side liquidity below the MA chart. Takes you half a second. Am I buy side or sell side liquidity? Am I looking for buy side sweeps or sell side? Look at the bottom left chart. What is it? Buy. So both my charts, it takes a half a second to just read them and say, hey, we're buy side liquidity, right? Now, what ledge do we want to watch for sell side liquidity? We want to watch for what? The 20 here and the 50. The 50 is most important. So 69.76 is a really key level for us today. 5 minutes just passed by, right? So we want to adjust our 5-minute opening range now. Let's adjust our 5-minute opening range. After the first 5 minutes of the opening range, if it's easier for you, you can pull up a 1-minute chart. If it's easier for you, you can pull up the first 30 minutes. Here's 9:30 right there. So the low is going to be 79 3/4. And the high is going to be 935. The high is going to be 89 1/4. 79 3/4, 89 1/4, which we're just going to make it the high here. All right, that's going to show us the opening range. If you want to go specifically, it'd be